Well, look, from my perspective, getting, if I can put it, more hard-nosed or mainstream capital involved in these more socially oriented investment opportunities, that's a really good thing. What we really want to engender is a really rigorous approach to measurement of commercial returns, to measurement of social returns as well. And so that rigorous mindset that your sort of vanilla investors bring to the table is absolutely crucial to what we believe the vision for the future should be, where you have this convergence of private capital, private markets with public initiatives totally oriented towards creating enduring social and economic value. It's really important. A lot of times you see sort of philanthropic or foundational investors, which is great. They play a really important catalytic role. But to really drive the efficiencies, you need that rigor of the more mainstream, more hard-nosed investor. Pipeline is probably one of the biggest. So I mean, you have at the moment something around about $46 billion invested in what could loosely be called impact investments, but that's an absolutely minuscule proportion of the capital which is available. The real issue is being able to provide mainstream investors with the types of opportunities that they can take to their investment committees and say, well, this is a real risk-adjusted rate of return upon which you can base your investment decision. Up until now, as I say, the foundational and philanthropic investors sort of not really concerned whether they get that return. They really just want to be, providing the ecosystem, building up that landscape, which is absolutely pivotal, as I say, that catalytic role. But as we move forward and that catalytic role is actually realized, and you do have the mainstream investors coming in and saying, well, look, we have a minimum ticket size of 100 million. What can you do with this? At the moment, I think there'd be, a fair scramble to find too many which should fit that bill. What we really want to do at Palladium is use the footprint that we have operating in 90 countries across the globe, working with communities, working with governments, really granular understanding of the cultural, economic, legislative environments, is we want to be able to really leverage that so that investors can come to us as the trusted partner and say, well, look, we do have this large ticket size that we're interested in. We trust you as people who have been working with enterprises at various stages of their life cycle. Could you please direct us in the right term? And would you in fact like to co-invest with us? That's really where Palladium adds the most value. Well, agribusiness really is, Palladium's been working in agriculture for the last 50 years, so it's really in our DNA. Also we work a lot in market systems development, making markets work for the poor. And a lot of those initiatives, particularly in West Africa, are around agribusiness. So that's certainly a focal area for us. But where I work is in innovative financial structures, which are pretty agnostic as to sector. So for example, about to launch a deal in Davos at the World Economic Forum in January. And that is looking at saving mothers' lives, saving newborns' lives. There's no commercial element in and of itself within the deal, but the return to the investors is predicated on actually reaching those targets of improved quality of maternal and newborn health services in private facilities across Rajasthan. Another one, for example, road safety in Vietnam, gender-based violence in Papua New Guinea. So the real value that I'm bringing to this is creating these instruments exactly that investors can actually come and have a very comfortable conversation because the targets are very clear, the measurement structure is very clear. There's no grey area of sort of it'll be all really nice if this happens or that happens. It's a mechanism which doesn't just enable these different actors to work together, it forces them to talk the same language and come to an agreement which is crystal clear and can be encapsulated in clear term sheets, which is the language of investment. I mean, so honestly, the work that I'm doing at the moment is at the real forefront of these innovative financing structures. And I would be lying if I didn't say that the transactional costs at the moment are huge. And almost an application killer. It's taken the commitment of Palladium to say, look, we are going to work at this for 2.5 years without any return because we believe in the transformative nature of it. If we keep on going from one deal to the other, which is so unique and has to be done in such a bespoke manner, we're not going to get the efficiencies that you'd expect as we start learning more and more about what works and what doesn't. So the real barrier for me at the moment in this space, in these new financial structures, social impact bonds, social benefit bonds, development impact bonds, social yield notes, the real barrier at the moment is from the public sector side, not having appropriate procurement and contracting processes and structures in place. And that's really an area that we need to work really closely with. Look, the pipeline, if we build a pipeline, the risk capital is out there. There is no doubt that there are investors ready with their hands in their pockets to invest in clear structures, transparent structures, reliable structures. It's about getting all of the actors within that ecosystem to come to the party. And at the moment, frankly, the public sector is lagging. Really bullish, really bullish. I think we need to move away from sort of, years ago when the term impact investing became en vogue, you'd have funds which would sort of just do a little bit of negative screening. They'd get rid of munitions and coal and call themselves an impact fund. Now we're looking at really proactive and very intentional measurement of that impact side of things as well. To me, that's a sine qua non. You can't have impact investment without meaning to have the impact and without measuring the impact. So I think it's fantastic. There's no doubt to me that it's going to be a burgeoning industry, but it will still be another, a good 5 years, I think, before it is even starting to mature to the point where some of your bigger funds are going to be entering in any meaningful way.